Today I'm here to talk about what are the risks of co-signing or acting as a guarantor for someone on their loan, whether it's a car loan or a mortgage or anything in between. There are some real risks that I really wanted to address in this video. Now, you've probably heard of this, a parent co-signing for their kid to buy a car, or, a family member co-signing for another relative to help them buy a house, and, things like that. These are obviously trusted family members or very close, people that you know. You're not out there co-signing for strangers that you don't know, what their finances like. And it seems like, as long as you make your choice correctly, there's not really any risk. So the first item that I wanted to bring to your attention is obviously if the other person doesn't pay and they default on their loan, you are now responsible for that loan. The part that seems to catch people off guard is that you are responsible for the entire loan, not half, not a couple months worth of payments until the other guy gets back on their feet. You are now expected to pay back the entire amount. And people don't seem to expect that when they do get into trouble. Not to mention your credit is going to be affected, collections is going to come after you, and all around it's a very unpleasant situation, especially if you are dealing with close friends or family members. How do you resolve it in a amicable way and not get yourself in trouble? Now, the second thing, which I think is even lesser known, is what if your friends or your family members are making all of their payments? There's no default, everyone's credit is perfect, everybody's happy, but you did co-sign for this person and maybe they've got a $500 a month car loan. Well, what if you now decide to go out and buy a house and you need to apply and get a mortgage? Well, even though this car doesn't belong to you, you don't make the $500 a month payments, that guy does, and you don't get any benefit from this car. You don't get to drive it around, every now and then for having co-signed for it. You are still responsible for $500 a month. Again, not half, not 2 or 3 months worth of payments, but the entire $500 a month. And what the lenders are going to do when they're sort of calculating out your financial balance sheet is they're going to say, okay, you already promised this $500 in case that guy doesn't pay. So we're going to take $500 a month of your income and reserve it aside. And then whatever's left of your income, that's what you can use to try to qualify for a mortgage. So, if you say you make $2,000 a month, their quarter of your income is now gone and it's reserved, and they won't let you use that in qualifying for a mortgage. So you may end up with something a lot smaller than you had initially thought. So if that's of concern to you, or you wanted to know more, there's a lot of intricacies to this that we usually get into with mortgage pre-qualification. Give us a call here at Finder Financial Services. Subscribe to our YouTube channel over on the side and you get notified of our next video when it comes out, and I will talk to you next time. Bye bye.